In today's video, we're diving into the fascinating world of price action trading, a powerful strategy that can transform your trading game. Price action trading is all about reading the raw price movements on a chart. No fancy indicators, no complicated formulas, just pure, straightforward market action. Imagine being able to make informed trading decisions just by looking at a price chart. Sounds amazing, right? So, what exactly is price action? In simple terms, it's the study of how prices move over time. By analyzing these movements, traders can identify patterns, trends, and key levels that help them predict future price movements. It's like learning to read the market's mind. Think of price action as the language of the market. Each high point, low point, and candlestick has a story to tell. And once you learn to read this language, you gain a huge advantage in the trading world. But why is this important? Price action trading cuts out all the extra noise and helps you focus on what really matters. To become a successful trader, you need to understand price action, and here's why. Most indicators like RSI, MACD, Bollinger Bands, and others are lagging. This means they use past prices to give signals. By the time these indicators suggest a trade, the price may have already moved. Price action is powerful because it looks at the current price movements. Instead of waiting for a lagging indicator to tell you what has already happened, you see what's happening right now. This gives you a more accurate view of the market's direction. I'm not saying you should ignore indicators, they can still be useful. But if you want to be a successful trader, mastering price action is essential. It lets you make trades with confidence, knowing you're acting based on the current information. Plus, price action is incredibly versatile. Whether you're trading stocks, forex, commodities, or cryptocurrencies, the principles remain the same. It's a universal language that works across all markets. In today's video, we're going to unlock 4 price action trading strategy secrets. Number 1, shrinking candles. This is a subtle yet powerful signal that can help you anticipate market reversals. So what exactly is a shrinking candle? A shrinking candle occurs when the size of the candlestick starts to get smaller as the price approaches a key resistance or support level. This indicates that the momentum is fading and a reversal could be on the horizon. Here's an example. Notice how the candles get progressively smaller as the price approaches this key resistance level. This shrinking of candles tells us that the buying pressure is weakening. When buyers can't push the price higher, it often leads to a bounce back or reversal. Psychologically, shrinking candles represent a market that's losing confidence. Traders start to hesitate and the energy driving the trend diminishes. This is especially potent when you see it accompanied by a doji candle or a long wick rejection. These signals indicate indecision and a potential reversal point. Look here. After a series of shrinking candles, we have a doji candle, which signifies indecision. This combination is a strong indication that the price is likely to reverse. In this example, the best place to enter a trade would be just after the long wick rejection or the doji candle. You can place your stop loss just above the resistance level to minimize risk. As the price starts to move down, you can ride the trend for profits. The same principle applies to buy. If you see shrinking candles approaching a support level, followed by a doji or a long wick rejection, it's a strong sign that the price may bounce back up. You can place your trade just after these signals for a higher probability of success. Before we proceed, if you're finding this video helpful, please like the video and subscribe to my channel. Your support enables me to create more content like this. Thank you. Mean reversion. This strategy can help you identify potential buy and sell points with impressive accuracy. Mean reversion is a trading concept that suggests prices eventually move back towards their historical average or mean. Think of it like a rubber band. When you stretch it too far in one direction, it snaps back to its original position. Here on the chart, you can see how prices move up and down around a central average. To make this clear, let's add a 50-day moving average to our chart. See how the moving average creates a smooth line that reflects the average price over the last 50 days? When the price dips below this moving average, it often returns back to it, and when it goes too high above it, it tends to pull back down. This is mean reversion in action. Let's look at some examples. Here we can see the price dipping below the moving average. This indicates a potential buying opportunity because the price is likely to revert back to the average. And over here, when the price goes too high above the moving average, it pulls back, giving us a signal to sell or take profits. So when is a good time to buy? Look for moments when the price drops significantly below the moving average. These points often mark oversold conditions where the price is likely to bounce back up to the average. It's like getting a discount on a stock that is about to increase in value. All right, traders, let's move on to our next price action secret, momentum. Understanding momentum can be a game changer in your trading strategy. Momentum in trading refers to the strength of a price movement. When a price moves strongly in one direction, it tends to keep moving in that direction for a while. Momentum is like a wave. Once it starts, it often continues until it hits a barrier or loses strength. Take a look at this chart. Here we see strong upward momentum. The price is rising gradually. Then there is a slight pullback before the market went back with a strong upward movement with large green candles, showing that buyers are in control. This is a signal that the price might continue to rise. When a chart shows gaining momentum like this, it's a good sign to enter a buy trade. For example, if you see several strong green candles in a row, it's an indication that the bullish momentum is strong, and it could be a great time to buy. Understanding momentum is crucial because it helps you identify the strength of a trend. When you can spot strong momentum, you can ride the trend and maximize your profits. In the same way, if you see strong downward momentum, it is a good time to enter a sell trade. As you can see here, you can see several strong red candles in a row, and then the market moved sideways after that, but then continued downwards. The power of full-bodied candlesticks. Now, you might have heard many traders talk about the importance of wicks, and yes, they do tell part of the story. But today, we're going to focus on the body of the candlestick. That's where the real magic happens. The body of the candlestick represents the range between the opening and closing prices of a trading period. A large, full-bodied green candlestick without any wicks, also known as a marubozu, is a very strong signal in price action trading. This kind of candle indicates that buyers were in control from the start to the finish of that trading period. When you see a full-bodied green candle with no wicks, it means that the price opened at the lowest point and closed at the highest point, with buyers dominating throughout. This is a powerful indicator of bullish momentum and can act as a great marker for support and resistance levels. Let's dive into an example. Here on this chart, we can see a large green candle with no wicks. This candle stands out because it shows strong buying pressure. So we set our support level at the closing price of this candle. After marking our support level, we see the price moves sideways for a bit. This is a consolidation phase where the market is taking a breather. Then the price reaches the level we marked as support. Watch what happens next. The price bounces off this level and there's no turning back. The price skyrockets. Why does this happen? That large green candle without wicks acts like a magnet for price action. Traders see this as a strong area of support where buyers previously overwhelmed sellers. When the price revisits this level, it's like a launch pad for another upward move. Before we wrap up, it's crucial to note that each of these secrets, full green candlesticks, mean reversion, momentum, and shrinking candles, won't have a high win rate on their own. However, when you combine them together or pair them with other trading strategies and indicators, they become extremely powerful, significantly increasing your success rate. By integrating these techniques, you can build a strong foundation for your trading decisions, allowing you to make more informed and confident trades. So take these secrets, blend them into your trading toolkit, and watch how they transform your trading results. All I ask in return is for you to like this video and subscribe to my channel. Your support helps me continue creating valuable content for you and other aspiring traders. Thank you for watching and happy trading!